Hello, and welcome to this really exciting session we've got, talking to and hearing a case study from our overall winner of the Deals of the Year 2019, Neumann Kaffee Gruppe. Really excited. This is a really innovative deal that won overall. And if you look at the various category winners, you'll see there was some really, really stiff competition. So Neumann Kaffee Gruppe did really well. And the judges felt that one of the things that stood out really was this emphasis on innovation for financing smallholder farmers through a groundbreaking blended finance deal. And I've got Catalina Eikenberg joining me now to have a little chat about what happened and what it was all about. Welcome, Catalina.
Thank you, Caroline, and thank you very much.
Yeah, congratulations again, an outstanding winner this year. And perhaps we could start with a little introduction to both yourself and Neumann Kaffee Gruppe.
Yeah, sure. Neumann Kaffee Gruppe is the largest coffee trading group in the world. We trade approximately 12% of the world's coffee. What that means is also that we stand in the middle between the farmers and the roasters being some of the brands you would know like Nestle or Starbucks. And we are right in the middle. We source the coffee and we sell it to the companies that are selling to the final customer. A bit about myself. So I'm not a coffee trader actually by background. I have a background in international development. I worked in microfinance and then for a large NGO called TechnoServe that works on business solutions to poverty. Now I've been at Neumann for 5 years and setting up at the holding level the Sustainable Business Unit, which is the unit that is now carrying out our sustainable sourcing strategy.
Well, thanks, Catalina. I've got a series of questions for you here, but just want to remind our audience at the bottom of your screen there's a Q&A button, so start your questions anytime you like, and I will try either to weave them into the conversation or we'll take some of them at the end, time allowing. But if we could start off talking a little bit about Neumann's sustainable sourcing strategy, Catalina, and where it comes from, where was that vision developed?
Sure. Our sustainable sourcing strategy is called NKG Bloom. We launched it last year, and it comes from recognizing a very worrying fact, which is that more than 50% of the world's coffee farmers live in poverty. So even though they work really hard day in, day out, they sell their beans, we're all enjoying our morning coffee, and yet these families are really struggling. They struggle to meet basic needs. And so as the largest player in the coffee supply chain, we decided that it's not okay to just continue doing what the traditional programs were doing, what the traditional, let's say, sustainability approach, which has to do with certifications. We wanted to go a step farther and really look into how can we support smallholders to enter a pathway out of poverty. And the first thing that one notices is that the majority of coffee farmers are running their farms way below potential. So they could be producing, for example, 2,000 kilos of coffee in 1 hectare. And in countries like Uganda, the average production is 400. So really like a very small fraction of the potential. And the reason why is because they lack access to some key services so that they can invest in their farms and maximize their production. And all in all, the key service missing that we saw was financing. So farmers have to prioritize basic needs like food or paying for school fees, paying for an emergency, taking a family member to a hospital. And because of that, they cannot apply fertilizer, for example, which is an investment that will yield a very high return, often above 100% return on investment within 6 months or a year, but they still cannot do it because they don't have that cash up front. So our Bloom's strategy has as its spinal cord financing. We provide financing that they need to invest in their farms and finally break that cycle of poverty in which they're trapped.
Makes absolute sense. Fantastic work that you're doing there, Catalina, and the rest of your team. So the 10-year, $25 million RCF to provide these loans to the small farmers. What were the challenges setting up that RCF?
Well, honestly, we had many challenges. I'd say the entire deal, let's say from the moment we had the idea until the moment we finally signed, was more than 2 years, probably. We began with an idea. We had a precedent, let's say. We had a precedent deal that we had done with ABN AMRO and only for Uganda. And that deal went pretty well. We were all very happy, and we basically said, why don't we scale this? Why don't we make it bigger? Why don't we make it something global? We bring more banks, and we also potentially bring other risk-sharing partners. So that was the core idea, but I would say the main challenge is still, putting all these pieces together, right? Then, we had to align with 3 different banks, 2 different cooperation agencies, because then it was not just IDH, but also USAID. And it's a process of give and take, right? And because it's a deal that had no precedent, like it hadn't really been done before, there wasn't a particular sort of song sheet to sing from. We really had to invent the whole thing as we went along, and each of the partners had to make compromises. And in the end, I really think the fact that we closed the deal speaks to how much everybody wanted to make it happen, because everybody had to really compromise quite a bit.
Mm-hmm. And you mentioned that the banks, ABN AMRO and the other 2 banks that you worked with, how did this deal fit with their own strategies?
So I would say in these 3 banks, so ABN AMRO, Rabobank, and BNP Paribas, even before we began conversations with them, they had already within their own strategies, within their own agendas, a very sharp vision about impact banking or sustainable financing. Like they wanted to come into this space, and then the deal came as very fitting, allowing them to achieve their goals. So I think that was really important, because it was not like we had to convince them at all of why this is important or why it makes sense to do it. Like the 3 of them already came to the table very convinced about wanting to enter this space. And that was really remarkable to see in these 3 commercial banks.
Absolutely. And just to dig a little bit deeper into the detail, perhaps, Catalina, the banks share the risk of the farmer defaults. I'm wondering what was the inspiration of this idea, and also the fact that the farmers pay back in coffee beans. And also you reference in the case the first and second loss mechanism. Could you tell us a little bit about those various points, please?
Sure. So let me maybe begin with the second question, which is the easiest one, on why repayment in coffee beans. So first of all, a lot of our loans to farmers are actually not in money. So we are lending to them things like fertilizer and other agrochemicals. We lend to them seedlings that we have produced and which they then use to replant and replace old trees. So a lot of the lending, there is still lending that we do in cash or more in mobile money. We prefer to not do cash, but do digital payments as much as possible. But I would say the bulk of it is in kind somehow. We give them the actual thing they need to maximize their farm production. And the repayment is in coffee beans, because we are interested in the coffee beans. We are not really interested in cash. We actually do not make a margin on the lending business per se. We are more interested in having the beans, because that is our core business model, buying and selling coffee beans across the world. So getting the beans is the ultimate objective for us. And this is why we ask for repayment in beans, although we do give the option to pay us back in cash if for whatever reason they were not able to pay us back in coffee. So we want to have that transparency, allowing them for that. But the grand majority of repayments come in coffee, which is also easier for the farmer. Like, this is their currency. It's currency for them. It's currency for us. Makes a lot of sense. Now, on the deal per se, so the way we structure it is we've got two tranches, and in the first loss position, we've got IDH, the Sustainable Trade Initiative, and us. That first tranche is a total of 20% of the portfolio, and we split it half and half. So they take 10%, we take 10%. And then the second loss position is that 80% of the portfolio, and it is split half and half. One half, meaning a total of 40% of the entire portfolio, is covered by USAID. And then the other half is split by the three banks. And the three banks come in exactly the same position, exactly the same terms. So the idea around this was first that we, as Neumann Kaffee Gruppe, come in the first loss for obvious reasons. We are the first ones to get hit, let's say, but IDH was able to provide also this first loss guarantee. And IDH, I would say, was like the anchor investor in this deal. It was with them that we began conceiving this in the very early days. And then together with IDH, we approached the other partners. So then we said, okay, look, we're willing, the two of us, to split this first loss. This is a pretty interesting anchoring for the deal, let's say, because losses above 20% would only be expected in some extreme cases, say a really tragic weather loss, drought or tsunami in a big coffee producing country. But aside from that, losses above 20% are really not expected. So the banks come in having a pretty good cushion of coverage. Like, if losses don't go above 20%, they're not really touched. And that provides a really good safeguard right there. And for USAID, they were willing to come in with a very big chunk. Ultimately, USAID is covering the biggest chunk of all, a full 40%, but they are also covered by this 20% cushion split by IDH and us. So yeah, I would say a bit the process here was first kind of have that anchor investor that was IDH. And then together having that, it was way easier to begin the conversations with the other partners.
Fascinating, absolutely fascinating. And I know a little bit working with some of these partners from my time at Save the Children International, for example. How was it actually working with USAID, AID and IDH, the Sustainable Trade Initiative? Were there any challenges? How did it all come together?
Look, there were multiple challenges. Some of the challenges I think are relatively standard when working with cooperation agencies. They can be slow, they can be bureaucratic, they've got a lot of rules that they need to follow to make sure that it's aligned with all of their criteria in many different areas, S&G, but also, lots and lots of due diligence, I would say, we had to go through. With IDH, because they were already a very close partner of ours and we were already working in the Uganda deal, things were a bit smoother, but with USAID, it was our first time. So we still had to go through all of the hurdles. I must say, we also faced some issues very last minute in the deal when the Trump administration said that they were not doing any more cooperation assistance for the Central American countries. So we actually had to take out Honduras out of the deal literally a couple of weeks before we were supposed to sign. And I know this was not the fault of the deal team within USA. This was, bigger issues happening in American politics. But you know what? We managed to even surmount that. So other of the partners stepped up. We brainstormed on how to deal with this additional risk, and we ended up splitting that, the portion of the USAID risk for Honduras, we ended up splitting it amongst all of the other partners. And actually now, 1 year after we signed the deal, USAID had said, dear partners, now we can take the Honduras risk back with us because the political agenda has shifted again, and now USAID can actually support Honduras. So that has gone back to USAID. But I think it really speaks to, there was really a massive willingness from everybody to make it happen.
No, very good. I think sometimes people underestimate what it's like working with governmental agencies and so on, the necessary kind of protocol, shall we say, and the detailed reporting and all the rest of it. And it is what it is, but I think people shouldn't underestimate the amount of work that goes into this. So again, really well done for all of that. Can you add anything, Catalina, around transparency and traceability?
Sure. So one of our core objectives of these sourcing strategies, so we want to have all this impact on the ground with farmers, but we then want to connect through traceability all of this impact with actual coffee sales, so that we are aiming by the end of this year to actually put out on the market what we call Bloom coffees. So basically these are coffee beans from farmers that are receiving these services, that are seeing their lives transformed. And it's about selling these coffees with a story to consumers that actually want that. Consumers want to know what's happening back at the other end of the supply chain, what's behind their latte. And there's a lot of nasty stories of, places where things that are not particularly good. And in this case, it's the complete opposite. We want to bring, the story behind that latte to be something really, really powerful, that the consumer can feel like, wow, yeah, this is the kind of coffee I want to be drinking, not just because it tastes good, but because I'm convinced that it's having some kind of positive impact in the world. Now, for that to be enabled, we need to do traceability. We need to figure out, connect all the dots coming from both sides, which is actually a pretty gigantic, especially because at the field level, at that very last mile of the supply chain, a lot of the transactions are not digitized. So it's a lot of pen and paper. There's farmers selling to farmer groups or selling to someone else. And this is just recorded in a pen and paper. Sometimes the information gets lost. So a big chunk of the work we're doing under Bloom has to do with digitizing that last mile of the supply chain, so that we can have proper records of who sold what, at what time, what price was paid, who is this farmer receiving what kind of services from us, how is the productivity of that farmer changing, and all of that information that we can pass it on all the way in the supply chain to our customers.
Thank you very much, Catalina. Now, just a reminder to the audience, do send in your questions because I'll be coming on to them in a moment or two. So please type them in the Q&A at the bottom of your page. But just like to ask you, Catalina, your goal, I believe, is to reach 300,000 families in 10 countries by 2030. Where are you now on that trajectory?
So we are now, of the 10 countries, we have begun the rollout of Bloom in 4. It's Honduras, Mexico, Kenya, and Uganda. And we are currently reaching with services around 60,000 farmers, approximately. We are hoping, COVID has delayed us a bit this year. We were going to have one more country, 2020, and actually we had to pause it. We're still hoping that in 2021 we will have at least one more country, if not 2, depends on the situation. Because, unfortunately, a big part of what we do has to do with face-to-face time with farmers. Like, whether it's training, convening, and this has come to a massive halt under the COVID situation, right? We're still trying to surmount that, trying to digitize certain processes and steps, but a lot of these communities, that people don't necessarily have an address, like a postal address. Sometimes phone numbers are switched across people, so we don't know who we are reaching exactly. So we've had quite a bit of a slowdown in 2020, but this is more or less where we are.
Okay, well, thank you very much for that, Catalina. And again, please do put in your questions for Catalina. We've got about 9 more minutes for questions. But I'd just like to ask you, Catalina, when you're looking back through his fantastic achievement, what have been the learnings for you? Any messages, any learnings, anything that you'd like to share with the audience?
Yeah, I think we've got quite a number of learnings. First, these kind of investments, when we are trying to go beyond sort of the standard certification approach and really come in with real services, like things that are providing some significant value to farmers. The investments are large upfront, and the return on investment is not coming in the short term. So we're looking at a time period of at least 10 years to break even on this kind of initiative. So there's really got to be a long-term commitment. And I think in our case, because we're a family-owned company, our shareholder has that commitment and has that vision of the long term, of wanting to still be in this business in a way that is good for farmers as well, not just over the next 5 years, but really over the next 50 years. And this is a bit the time frame. We don't have the kind of pressure that I think would be very complicated to make this happen if we had to be under pressure to make this break even in less than 5 years or so, which is normally the time frame that a publicly traded company might be looking at things at. So I would say that is the very first thing. So there's a lot of patience. The other part around, the part around partnerships. So we realized very early on that we would not be able to get very far on our own. So even though this is not a traditionally considered pre-competitive initiative where we are, let's say, sharing with our competitors because we consider this very competitive, actually we consider this part of our edge in being able to source coffee and really stay as the leader in this space. So even though we're not pre-competitive, we do work on a huge number of partnerships. Not just, these facilities, one where, there's 3 BH, there's USAID. We also have a global partnership with MasterCard, and we're working with them on digitizing payments. So what I was talking around earlier, we need to digitize that last mile of the supply chain. We need digital payments to be able to disburse money to farmers. So even if we want to make a loan, but if we don't have a digital means to do it safely and cheaply, the disbursement cannot happen. So the partnership with MasterCard is very, very important to us. We also have received support from the MasterCard Foundation, which is completely different from MasterCard, the company. So yeah, I would say partnerships for us have been a really, really big deal. And I really cannot, say enough of how much this has meant for us.
Oh, great. And Catalina, thinking about all that and the partners and so on, I'm really curious, if I want to make sure I'm buying some of your coffee that has been generated through this sustainable method. I know you don't want to, I'm not asking you to for a sales pitch or anything, but I am actually curious, how would I, as a consumer, where would I go? Where would I be buying your coffee? Are you able to give me an indication of the kinds of places I might be able to be sure of drinking Neumann Kaffee?
Well, that's a tough one because, well, first we have not begun selling Bloom coffees yet. We're actually working on that traceability piece as we speak. But because we are a B2B, we still, I would not be able to tell you yet whom of the brands is going to be interested in buying these exactly. I've got an idea, but I wouldn't dare to say any names. And I am not sure exactly how they will end up passing this message to their consumers. So normally it's probably going to end up branded with the brand of that roaster. And these are things that we are still working on. So unfortunately, I can't really tell you, but maybe next year we will know once the coffees are out.
Indeed. And if you're 12% of the market, of course, I can probably be assured that if I go to some of the major roasters, I'm likely to be having some of your coffee then anyway in the meantime, hopefully. And just reflecting on the award itself, how has that been received in the company? And do you think it makes a difference having an award?
It makes a really big difference. It's super encouraging, especially this year, because it's been such a tough year. We had to slow down. We've been kind of really hit by this COVID situation in being able to interact with farmers. Farmers are also risk averse in terms of taking financing. So it's been a tough year, and getting this award, I think, is really reassuring that it's still, that this is something that was really worthwhile, and that, we're going through a slump, but, it's a 10-year deal and we will see this through. So yeah, it's very encouraging. I think it's been really well received at our group, but also with our partners. A lot of them as well are going through difficult circumstances, and I think this means a lot. Yeah, thank you.
Oh, great to hear that. And one of our audience would just like to know, I think this will be our final question as we're running out of time, but they'd like to know, how does your focus on sustainability in this deal reflect future deals going forwards?
Well, in terms of future deals for us, I'm not sure. Let's say, I think having done this definitely places it in a very good spot to do much more. So one thing, for example, that we are considering already is if we were to have some significant portfolio growth above what, the 25 million, I think we would have now a very good sense on how to very quickly get more banks in, for example, or more financial institutions that would want exposure in this space. We've actually set up the deal to be able to kind of grow like that and allow for more entrants, let's say. I would like to think, beyond us, that we are setting a precedent for others to also come into the smallholder finance space, and not even in coffee, cocoa, other value chains. The financing needs of smallholder farmers in the world are just gigantic. The World Bank estimates less than 2 or 3% of smallholders have access to formal means of financing. So there's massive space way beyond coffee, and hopefully other financial institutions and other players in the supply chain will find some inspiration, maybe some assurance that some of these things can work, and start getting into that space.
Yeah, well, thanks, Catalina. A great note to end on, very positive. Let's hope that other people follow your fabulous example. So thanks again to you and Neumann Kaffee Gruppe. Congratulations again on your award. And thanks so much for joining us today at short notice, of course, because we only announced the winners Monday night, to be able to talk through what you've done. A fabulous job. Thank you so much. And to our audience, thank you for joining us.
Thank you.
Thanks, Catalina. And do join the discussion group in the audience. Do give your feedback. There's a survey just next to the Q&A. You can give your comments on this particular session. And do look around the site and go to the timeout area for a little bit of relaxation, maybe. Look at the other sessions on demand and the live sessions coming up shortly again. And yeah, just do make the best of this virtual platform, I would say. And you can still look at everything for the next 30 days. This session is being recorded and will go up on demand shortly as well. So thank you all very much, and thanks once again to Catalina, and congratulations.
Thank you, Caroline. Thank you very much.